Now let's bring in our next guest. It's going to be Michelle Gibley, Director of International Research at Charles Schwab. Welcome to the show, Michelle.
Thanks for having me, Tom.
So we got a lot to digest here. A lot of announcements made over the last hour here, Michelle. What's your takeaway? Because the equity market reacting pretty positive to these reciprocal tariffs that was announced by the administration. Give us your take.
Yeah, these reciprocal tariffs are really just the latest addition to the tariff toolbox. It's at this point just more of a plan for a plan to examine each country separately and not just to take into account tariffs, but also the value added taxes, which is really just a sales tax on all goods sold in a country, currency valuations, other trade barriers. But what the market is liking here is that there's a delay for implementation. And that really gives us time for negotiations. And Trump even indicated that he would lower tariffs for other countries if they lower theirs. So, it just kind of reinforces our view that tariffs are likely to rise, but by perhaps, they may have more bark than bite. The rise might be less than threatened. So far we've seen tariffs quickly coming and going, and there's really a pattern here. We saw this in 2019. When Trump announced a 5% tariff on Mexican imports to take place in 10 days. The rate was supposed to escalate by 5% a month and reach 25% in 5 months. That threat was dropped a week later and never took effect after Mexico agreed to measures to stem the tide of migration. We saw this already with Mexico and Canada so far this year. So far, it's just a delay. They haven't been dropped. We do believe some increase is likely, but if we get this trend of tariffs quickly coming and going, continuing, the earnings and economic impact may be contained. And that's what the market is looking at right here. But if the uncertainty lasts, economic growth could slow. We're just going to continue to have this trade policy in the headlines, and trying to trade every announcement is really kind of fraught with risk. And investors might want to keep a longer term perspective.
Yeah. And Michelle, that's, I think, what investors have tried to navigate during these headlines when it comes out. Initially, it was a 25% on Mexico and Canada, 10% maybe on China might be added down the line here. The conversations he's having with Modi from India, they've got some of the highest tariffs. But this has always been, and I think, you kind of hearkened back to 2019 when, in his previous presidential run, where he just uses this as a negotiating tool, and you do have to look past maybe the near-term headline implications, right?
Yeah, we believe it's a negotiating tool. We do believe tariffs could rise, but these, kind of big numbers that we hear may not actually take effect.
When you look at this, I mentioned India. Trump in his first administration, they're very on friendly terms there. Is this one of those areas that we have to keep up where he's going to talk to, PM Modi and say, hey, you've got high tariffs. We're going to have to, get those down, where we're going to negotiate something because of the economic impact that might have down the road with over 1 billion people and consumers. And that's one of the last areas as far as economic growth that the U.S. might be looking at.
Yeah, actually, as you mentioned, Trump is meeting with Prime Minister Modi later today. We believe that, it might be surprising that a trade war could result in lower tariffs in some cases. And India is really a prime example of this. We've even seen already the EU there's been a rumor that they'll lower their tariffs on U.S. imported cars. They currently have a 10% tariff. We have a 2.5% tariff. So that might be something gets lowered. India is already moving in this direction. They, as you mentioned, have the highest tariff rate of our major trading partners that the U.S. runs a trade deficit with. And the government there really wants to boost its appeal as a manufacturing destination. We've seen Apple build new factories there. And India's done this by reducing red tape and reducing subsidies to manufacturing. And they're already looking to de-escalate the trade war before it even starts with them. Earlier this month, when we had all the headlines about a 25% tariff on Mexico and Canadian goods, India kind of quietly cut tariffs on a slew of products including motorcycles, components used in building electronic goods and luxury cars. This could be a benefit for India. If they cut their tariff rate by 1%, it could boost its GDP by 0.5%. Indian stocks haven't really done that well this year. Earnings estimates have been cut because economic growth is slowed amid high inflation. But inflation might be peaking, and the central bank has finally started to cut rates this month.
Yeah.
So growth could stabilize there.
Yeah, when you look at the international landscape as far as markets, we've seen some rapid cuts from the EU, Bank of England. At this point, their economies aren't doing as well, but their markets are still doing relatively well. Are there still some opportunities there as we get through this tit for tat as far as tariffs go?
Yeah, it's kind of surprising, I think, maybe counterintuitively. International stocks are outperforming despite all this drumbeat of America First policies. The European stocks, represented by the MSCI EMU index, that's the European Monetary Union, they're up triple that of the S&P 500 this year. And the broader developed market index of EFA is up double that of the S&P 500. And, there's just a lot of pessimism, particularly with regard to Europe. And it might be reflected in the stocks. The EMU index is trading at a 35% discount on a next 12 months earnings basis relative to the S&P 500. And, for stocks, remember that better or worse matters more than good or bad. And recent economic data in Europe has actually been surprising to the upside. The biggest sectors in EFA are financials, industrials, and healthcare. And these sectors are outperforming this year. Financials in particular might be a haven as they're not directly exposed to tariffs.
When you look at the geopolitical implications, Michelle, I think that's been a thorn in the side. Israel, resolution there, but, still some hot pockets as far as that goes. Trump had a conversation with Putin. He talked 2 days ago with Zelensky from Ukraine. Is that a caveat maybe for, broad-based growth, not only here in the U.S., but internationally, if we get some resolution to the conflict that we're having in Russia versus Ukraine?
Yeah, certainly a resolution there could be good news, not just globally, but for Europe in particular. Reminder that, energy prices have been high there, and that was a result of the war. And so that if we get some better energy prices as a result, that could benefit Europe in particular. Another thing on our calendar is the February 23rd election in Germany. So we're going to be watching that really closely.
When you look at other areas within maybe whether it's Europe or Asia, are there any that stick out to you that maybe have underperformed that could see a boost here in 2025?
Well, as we mentioned, international is already doing pretty well. And maybe another one that's not getting a lot of attention is China. Chinese stocks are doing really well lately. There's a lot of optimism about maybe some energy there in terms of AI after the DeepSeek news a couple weeks ago. That, I think a lot of people dismiss China as a source of innovation, and there's innovation there. And so there's some of the tech stocks are doing well right now.
Yeah, you have to wonder, as far as the investments from outside of China that have kind of slowed down a little bit, maybe pushing back into India also. So we'll continue to watch that. Great discussion, Michelle. Have a great day.